Good afternoon, all. CamelbackTrading.org coming to you this Tuesday afternoon, September 13th. We are looking at Window Traders market profile of the ES and the SPY. What an awesome day. What an awesome textbook day. We haven't seen one of these in a while. Large gap that holds, highest accepted price, 5 sets of single prints, triple distribution day, price probe, you name it, good volume, huge range. Wow. So let's recap real quickly before today. We said this market was attempting to go higher. We said it was emotional trading with 2 gaps. We got above the 50. We got above the 20, although we did say yesterday one day does not make a market. Boy, oh boy, is that for sure. The main thing that the buyers, or not the buyers, I don't like using that term, the bulls were looking for was one more thing which would probably ease them into Fed Day, and that was a CPI number that came in line. Well, it came in worse, and boy, oh boy, we talk about paper mache traders, glass jaw traders. We went from 415 in the overnight high down to today's low of 391.92. We came in $23. You talk about people running for the hills and the shorts piling on. And the beauty of it is how if you come in without a position and unbiased, even though I was looking for the market to go higher, we said we always give both sides. Well, guess what? That number totally took away the advantage that the bulls had. And all we did is wipe out 4 days, 4 days worth of longs with shorts piling in. To me, the daily is in balance. Markets don't go bull bear. We don't go from gapping up twice and being up 4 days in a row, whatever we want to bull to bear. It's balance. It's a 5-day balance. It's emotional trading. It's an island reversal from the gap high yesterday to the gap down today. The weekly is still up for me, but there's a possibility with 3 days to go we could take out last week's low and have an outside week down, or at least put the weekly back into balance. Remember, we had an outside week up last week. Do you see what short-term fragile traders can do when they get whipped along with high-frequency traders and hedge funds? Now, one interesting point today is we had a huge battle at the 4,000 level. 8 time frames we traded there, and then finally gave it up. Now, remember last CPI or 2 times ago, we had the huge gap down, but we ended with a wide POC and no trend day. Well, we did have a pretty wide POC day, but it's only 8 wide. Could this have been some long-term money buying it? I don't know. Possibly. Or is it just we got 8 wide because they defended the 4,000 level and nobody wanted to put their algorithms to really flush below it until later in the day? That might be the better explanation. Triple Qs. Same as us, triple distribution and a price probe. Same thing on the Russell. Triple distribution and a price probe. Look, I'm not going to go over all my trades. We'll be here. I did 9 shorts today. I did nothing but short it. I shorted A, B, C, F. I missed I. I'm furious about I. My fault. I offered it right at B's low at 17. I thought we got close enough. I know VWAP was right below us, but I thought we got close enough to fill the singles to start a short. Didn't happen. Never shorted it. That sucked. But I did short K period twice, and I shorted L once. M period, I was busy. I'm sitting here writing 2 sets of numbers. This isn't easy, believe me, to be doing this. And that's another reason why my room appreciates me, and I hope everybody that listens to these videos appreciate me, especially since these videos are free. Just doing all this, it's a lot of work. I enjoy it though. So I did nothing but short today. I had not one long interest all day for good reason. The market told you to only look for shorts. I kept my room out of trouble, right? I told my room that I beg of you not to look for longs. It's just not worth it. Even in H&I, I'm like, you shouldn't be looking for longs. You should be looking for shorts. So again, I think the room heated me, and the majority did very well shorting. Quickly on destinations, because there's a lot of them. In SPY, I'm only going to give you the single print fills because there's just too many. Price probe was 394.17. First single print fill is 395.59. Second one is 397.15. Third one, 397.60. Fourth one, 399.70. Fifth one, 400.81. Highest accepted price is 401.06, and today's high is 403.10, filling the gap at 407.51. 441 point gap. I will not repeat these again. For the downside, 391.92 daily. Is that right? Yep, 391.92 daily low, 390.20 daily low, 389.14 afternoon pullback low from the 6th, and 388.42 weekly low. NES, the downside, 38.50 daily low, 21 daily low. For the upside, price probe, 61.25. Single print fill, 75.50. Next one, 91.25. Third singles, 95.75. Fourth one, 17. Fifth, 28.25. And then the highest accepted price is 30.75. Today's high is 51.25, filling the gap at 41.03.75. Now, let's go to the chart real quick. And I'm rushing through this because I have a new person who's not even in my room that wanted to do a consultation. It's another thing. Even if you don't want to join my trading room, you want to learn the profile, I offer these consultations. It's $100 an hour, $75 through Venmo. So again, you can hit me up at paul@camelbacktrading.org if you want to learn more about the profile or breaking down charts. Here is the weekly. The monthly still balanced. The weekly, now this has the overnight high in it, so that's going to be different. So the weekly is still up for me. Yes, we came in a lot, but we took out last 2 weeks' highs. So unless we take out last week's low, I will call the weekly up. If we take out last week's low at some point this week, it's back to a 3-week balance. Okay? We got rejected at this trend line. Big time. Let me show you one thing in the monthly that they have to be careful about. The trend line, we're in a 5-month balance. The balance low is our yearly low. But this trend line comes into play around the 379 level. So that's going to be important for 2 reasons. Number one, that would be below last week's low. And number 2, that would probably tell you if you get below it, we're going to go make new, test the yearly low and maybe make new ones. And then here's the daily. So here's what I'm talking about. Markets don't go bull, bear. We went bull, balance. This is a 5-day balance. We're going to use September 7th low as the bottom of it. We're going to use yesterday's high as the top of it. So if we take out today's low tomorrow and don't get below or accepted below that 390.20 level, it's still just a bigger balance. That's all it is. But for now, we failed 1 day above the 20. See ya. Rejected at the 50 today. Goodbye. Again, that one little thing today that the bulls were trying to see if it was going to keep this momentum going upwards. And boy, oh boy, did it get derailed. So one other quick thing to look at. Remember we had lower highs all year from January through June, right? We had a progression. Lower high, here, 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 down to here, down to here. It was finally broken, and lower lows, right? It was finally broken when we started this move up. But do you notice what we've gotten now? Now, that's an interesting thing to keep an eye on. Are we getting now a new, for the 4th quarter, lower highs again? Right? Here's this one from May. Not May. We took out the May high. That's August. Now this one. And now again yesterday. Something to certainly keep an eye on. If we can't take back this day and start getting some legs above yesterday's high, well, then maybe the new game of lower highs and lower lows will be in the picture. I hope you stayed safe today. Thanks for the likes and subscribing. Enjoy your evening, and we'll speak prior to the opening tomorrow.